Okay.
Ladies and gentlemen, we can start whittling back in. Welcome. Okay, everyone, may I have your attention, please? Let's take to our seats so that we can continue. I trust everyone had some time to recharge. Hopefully you spoke to somebody whom you haven't met before. There's invariably networking and getting to know each other. Thanks very much. All right, so let's settle down. For the next part of our agenda, we are actually going to be having a presentation from none other than Mr. Christopher Hamilton. He's asked that we all call him Chris. And effectively, this specific presentation is going to be navigating the future, unlocking emerging payment innovations. It'll delve into the cutting-edge world of innovation and those that are specifically shaping our payments landscape globally. The idea is to see what does that all mean for us, from fintech solutions and digital currencies to open banking and beyond. We have to stay ahead of these trends, and hopefully Chris will help us figure out how to do that. I mentioned in the first session that we love Q&As, we like questions, we like interrogating things. So quick question, who remembers the fourth thing the minister said? I just want a show of hands. Fourth thing the minister said, please, if you don't mind, please tell us. What was the fourth thing, Cindy? Could you say that again a bit louder? I'm checking my notes here to see whether or not you're actually going to get a gift afterwards, because that sounds a lot like the first one, but the fourth one that she mentioned.
Digital and financial literacy. Is that the
Sort
third
of.
one?
We're almost there. Let's see someone else if they can also take a try at the back. Thank you. It was the regulatory framework must be enabling. He's paraphrased, but we'll give it to him. So at the end of the session, please just go to the back. There is free coffee and tea. That will be something that you can definitely enjoy, prepared by the fantastic department from National Payments. At this point, I would like to ask the team at the back to show a simple QR code. The members are familiar with a system called Menti? Are we? Okay. So now when I say we take Q&A seriously, you can imagine. That's on the screen at this moment. And what will effectively happen is that at the end of Mr. Hamilton's presentation, we're going to have a quick dialogue discussion with a few panelists, and we're going to have some questions posed, and we would like you guys to actually give some answers to them so we can actually see how well you've been listening. Mr. Hamilton, are you ready, sir? He is. I'm going to ask him to come to the stage. Let's know a little bit about him. Who is Mr. Hamilton? So he's a strategic advisor on the National Financial Infrastructure at Hamilton Platform, a globally respected expert in payment system modernization. He has advised numerous countries on enhancing their financial infrastructure and brings decades of experience in implementing national payment solutions. We're fortunate to have him, and obviously for him to share his insights regarding the emerging payment innovations. Mr. Hamilton, over to you.
Thank you. Good morning, everybody. I find it very hard to stand behind one of these things for an entire speech, so I sort of wander as I talk. I also hope it keeps people awake a bit more, so if that's okay. So my job this morning, I think, and let's just get the things going. Yeah, my job this morning, I think, is to excite and enthuse you about the incredible possibilities of the future of payments. Or maybe it's to terrify you with the risks, or maybe it's a bit of both. So I'm going to have a go at doing that, and happily the Deputy Governor has already done a good job for me here, because she's positioned a lot of the issues we're dealing with extremely well. And if you'd listened to the first two speeches that we've had so far this morning, and you weren't a payments professional and dealing with the issues every day, you could be forgiven for feeling a bit apprehensive, a bit bewildered. There's a lot going on. I conceive it as my job to give you a bit of a mental frame, a way of thinking about what's happening to us, which will allow you to go and inquire further. Now, there are single lines in this presentation that you could spend a whole day on. So I apologise for that in advance. This is a lot of material, and it's a big, complicated topic, and millions of words are being written on many of these issues. So we can't cover everything in detail. What we can do, though, is start to put it into a context, put it into a frame which starts to make sense and allows you to think about what it might mean for you personally, but also, of course, professionally, what it might mean for your organisation and where you need to dig deeper and where you need to start strategising. So that's what I'm trying to achieve. If you don't think I'm doing it, feel free to stick a hand up and ask a question or explore an issue. Very happy to do that. We'll do some Q&A at the end, but I'm always keen on audience feedback, and the more the better. So look, partly in order to get us in a calm, reflective frame of mind, I want you to think about a beach. I want you to think about the waves crashing with their regularity on the beach. How many people here are surfers? Who likes going surfing? Anybody? Not too many surfers in the room. Shame. Okay, well, I'm Australian, so I'm a surfer, so tough you're going to hear about surfing. Sorry about that. Why am I presenting this analogy? Because I think it's a way of thinking about what's happening and what we can do about it. When you're at the beach and you're a surfer, you don't get to decide whether the waves are coming or not. That's happening out there in the ocean, right? But you do get to decide how you react to them. You can catch a wave, you can ride it to the shore, or you can dive underneath it, or you can stand there and get hit. Those are your three choices, essentially. And what I want to suggest to you is that we have what surfers would call a set of waves coming in over the next 5 years, which you need to make those decisions on. And the really interesting bit is not so much what you do with each wave, but how you react to the interaction of each wave with the waves that went before. Because that's the hard bit for us. That's where the real unpredictability is. And again, if you're familiar with how beaches work, the interaction of the waves breaking in different ways is what causes rips. And rips are dangerous. Rips drag people out to sea and drown them, right? So a way of thinking about what's happening to us is, what are we going to do about each? We're going to deal with the complexities that arise from the waves interacting with each other. What waves are we going to ride? What waves are we going to maybe avoid or not ride? And where to avoid the rips that are on the beach. And there will be rips. Have I lost anybody? How are we feeling about that? Does that make sense? Cool, great. Of course, all of these waves are driven by, for us, in our analogy, are driven by 4 key forces. And you might hear this called a pest analysis, if you like. I like to think of it this way. You've got to think about the user first. What do they want from the payment system? The Minister made that very clear. That was excellent. Think about the user first. Then think about the market structure, the economics. Who's going to make money? Who's not going to make money? How might we reposition ourselves so that we can be, on the right side of that conversation? And how does that framework fit together in terms of the chain of interactions in the marketplace? Obviously, government has a great deal to say here and can close off certain avenues, open up new avenues, encourage, cajole, and sometimes prohibit. Technology, again, we have remarkably little control over global technology today. This is why I think the wave analogy is useful. This stuff is just coming at us. We don't get to decide to use technology anymore. It's going to decide what it does to us, and we have to react. Again, it's the surfer in the water. You can ride the wave, or you can dive under it, but don't get hit. Cool. So here are my set of 7 waves. You know waves always come in a set of 7? Did you know that? They do. There are always 7 waves, and the expert surfer waits for the big wave in the set. Okay. You can decide which one's the big wave. The first one, this is already here. This is on shore. You have to decide whether to jump on it now, right now. This is not tomorrow. Digital public infrastructure. This is a concept which has a great deal of currency in global policy circles right now. And the reason for that is it's a compendium of technological developments, changing economics, and changing social needs, changing user needs. And in effect, it is a playbook or a way to approach the rapid development of emerging market economies in their payment systems so that they can maximise financial inclusion and inclusive growth and economic growth. That's basically the logic. And there are entire playbooks, literally playbooks, written about how to apply this in your economy. I know you guys know this already because you're about to implement one of the key planks of digital public infrastructure, which is the instant payment solution. So the bit to bear in mind in particular is this chunk in the middle where there are 3 infrastructural components that together make up what the World Bank, at least, and a number of other people are saying, is the framework, the enabling framework for inclusive growth. And they are a digital identity system, instant payments, at least, or payments, digital payments of some kind, but in practice, instant payments are a key part of it, and a data sharing framework. The data sharing framework you might also hear talked about as open banking or open finance. The key idea here is that there is a standardised way of sharing key payments-related data around the marketplace. And so it's like open banking, but with the next layer on top of it of how you're going to use those interfaces. Those three things together give you the basic planks of a world-class digital public infrastructure. At least the World Bank thinks they do. And then, of course, there's non-technical stuff around it and some basic plumbing that needs to be done. The slide talks about that. I'm not going to spend too much longer on that. Again, you could write a whole book on this, right? But at least we know this is wave one. This is what we have to deal with straight away. This one might be a bit controversial. Apologies if the bankers in the room are alarmed. Don't be alarmed. It's okay. You might want to duck under this. What do I mean? UPI is one of the most successful pieces of instant payments infrastructure was to make sure that all payments always start and end in a bank account, thereby guaranteeing a role for banks in the community administered by a bank. That is very common in Africa. In India, you can't do that. If you want to do a payment, it has to start from a bank account, has to end in a bank account. That's by policy, right? But non-banks are given much greater access to the payment system to initiate and manage payments on behalf of their customers. How does that work in practice? Well, it actually works remarkably well. The non-bank typically provides you with the interface, an app, a website, whatever. You tell it who you bank with, and it does the rest. That's how the system works from the user's perspective. We can go, well, we actually can't, haven't got time, but there's a lot more detail behind it, but that's the basic user experience, right? The customer journey, if you will. So that's how, and this system has grown rapidly and been remarkably successful because it does that economic thing really well of balancing the economic interests of the participants and encouraging competition. And that's really interesting to me in the way the Indian system works. This tells you what the consequences have been, and this is becoming controversial in India. The non-banks are killing it. They're doing a great job. The two largest initiators of digital payments in India today are Google and PhonePe, which is a telecommunications company, right? The banks have the same access to the system as the non-banks. They're well-funded, they have a guaranteed role in the ecosystem, as I mentioned before, and yet they're not winning the battle with Google and PhonePe. And I'm sure there's a lot of soul-searching going on in the banking world in India about why that is. And I think that's a very important frame to think about how our world is changing. We all carry around in our head, and again, I've given whole talks on this one, we all carry around in our head the idea of a bank, what a bank is. And it's often hard to get people to clearly articulate what they think that means, but everyone thinks they know what a bank is, right? For me, a bank is the synergistic combination of four particular activities. And the reason why we all so strongly know what a bank is because we're so used to seeing that over and over again. It's such a powerful combination of activities. If you take in deposits, you can lend people money. If you're holding their money, you can help them do payments. These are the core activities, right? This is the basic idea of a bank. Here's the big wave of change. Technology is reducing the natural synergies between those different activities. It's making it possible for someone to do payments but not do safekeeping, for example, as in the Indian example, to do lending without taking deposits. So the natural synergies between banking business they're not going away, but they are reducing, and that gives opportunities for new competition and for alternative players. In the future, I think banks will start to look a lot less like a traditional bank and will pick different roles in the marketplace. Now, I'm not saying this is going to happen tomorrow, but the core elements of it are starting to happen already, as we can see from India, as we can see from many places in Africa, where a big part of retail banking is now being done by mobile companies. How will we respond to this wave? Will we dive under it, or will we ride it? Okay, this one's an easy one. We all know this, I think. Maybe it should have come second. I don't know. You can have an argument about what order these waves are coming in. But absolutely, no doubt about it, our world is being shaped by platforms. If you do an experiment with yourself, what do you spend time on when you're on your mobile phone? What do you spend time on when you're at your computer and you're not doing boring stuff like spreadsheets and documents? And most people will say most of their time is spent inside. You can call it a super app if you like, you can call it a platform if you want. And of course, that's exactly what these platforms want. Their business is eyeballs and attention. Their business is making sure you spend as much time as possible inside their app for whatever it is. Probably the most advanced place in the world for this evolution right now is China, actually, where there are a suite of fiercely competitive, massively customered digital networks that are providing services right across the spectrum of possibility. Anything you think you need, you can get from a super app in China and not go outside their app, because that's their business, that's what they want. Now, two things about that. First of all, these things can grow and become significant digitally much faster than before. That's the diagram you see, that's the chart you see here now. It's startling how quickly in evolved digital landscapes, new platforms arise based on some successful product, and then there's a desperate rush to add new services and products to the platform to keep it relevant to the community and to get people to spend more time on it. This is the modern dynamic we're going to be living in for quite a long time. What does it mean for payments? Well, I'm sure you can guess some of this because we've seen some of this activity already. But if you are a successful platform, how do you view money? What do you see? What is money to you? It's another service. It's another way to create stickiness and to get people to stay on your platform. So all platforms start thinking about how to add payment services to the platform to enable that experience inside the universe all the time, right? We've seen some very ambitious and so far unsuccessful efforts, like Facebook attempting to create its own currency called Libra, which was not successful, but they will try again. There's no doubt about that. We've seen other efforts of alignments being made between platforms and banks or entire banking communities to provide services. There are lots of different ways of slicing this potentially, but the point remains, the locus of activity in providing payment services is tending to move to these platforms, just as everything else is in the digital world. Have I got you worried yet? And you can read up a lot on this, but I want to make 2 points here. One is that, the stickiness of platforms. The other one is the proliferation of platforms. So the big challenge, and I don't know the answer to this one myself, is what happens when you reach peak platform? Like, how many platforms can we have in a given community? Because you and I don't want to spend our time rushing frantically between different platforms and super apps, right? If you're an Instagram enthusiast, you're probably not as keen on Facebook. You probably don't spend equal time on those two. You probably choose one, and you might be Snapchat or someone else, right? I don't know. But you get the point. I think there's a sort of limit to the human attention span, and I don't actually know how that's going to play out, but we're going to find out in the next couple of years. Okay, fourth wave. You can't have a presentation without Donald Trump these days, can you? It's frustrating. Anyway, I like to call it tectonics because that gives you that sense of these massive continental masses shifting and rubbing up against each other and changing shape. And at least in a trade and economic sense, we are in a period of rapid tectonic action. Things are changing fast. I don't have to tell you this, you read the news. What does that mean? It looks to me like it means, and everyone here will have their own, and some cases much better informed view, that we are changing the nature of the economic blocks that exist around the world, and it may well be that it'll be increasingly hard to be friends with everybody, which is the way many smaller countries, and I think Namibia historically has wanted to be. It's a great ambition. Will the economic world let you do that in the future? That's a question, I think. We have to think about that. But, you know, it looks like there will be an alignment around the United States and its way of thinking about things, and it will have its favoured friends that it gives low tariff rates to. And there will be alignments around China and India. Whether that'll be one block or two, I'm actually not sure yet. But you can see those things having a profound impact on the spread of economic activity around the world, and therefore, because payments is the handmaiden of economic activity, on payments as well. In Africa, the extra element of this is the increasing focus on intra-African trade, on continental trade. So this is obviously a big focus. It happens at the regional level of SADC and other regional groupings, but also increasingly in the way policymakers are thinking about the entire continent and the encouragement of more economic activity within what is potentially a very powerful economic grouping, and less giving of that economic activity outside the continent. And payments needs to follow that trend. As that occurs, payments as a community and as an infrastructure, we need to support that. So that's why I think it's a wave in its own right. There are already quite a lot of efforts towards cross-border payment infrastructures of various kinds. This is the diagram is from the African Nenda report of last year, I believe, which says there are 3 live cross-border payment infrastructures in Africa. I think you can argue about the numbers. There's certainly about half a dozen in development within the regions and elsewhere. Which ones will succeed? I'm afraid I can't tell you that, but we're going to have to think about this, and I think Namibia, in terms of its policy, is going to have to think about how it wants to play in that space. Namibia, of course, has been a strong supporter of the SADC community and supports the SADC regional developments, and that's a natural take. What else is needed, I think, is sort of the interesting question. Okay, you knew this was coming, didn't you? Number 5. The S word, stablecoins. So tokenized money is in some ways has been a very overhyped idea, personal view. We've been talking about it since Bitcoin got going in, 2007, 2008. We've been talking about the future of tokenized money because Bitcoin was the first assertion of attempt at tokenized money. And it's always instructive to remember that the whole idea of mobile wallets and mobile money got going at around about the same time. And as between those two, Bitcoin and mobile money, which has had the greater economic impact on the world so far? Mobile money by a country mile, of course. It has transformed the lives of millions of people. Bitcoin hasn't done that. So that's why I say it feels a bit overhyped, and yet this year in its annual report, the Bank for International Settlements said, now's the time, basically, on tokenized money. It's not talking about Bitcoin, of course, but is talking about this idea that we can create distinct digital tokens that have inherent value and can be used as money. And there are 2 main flavours in the modern discourse about this. There are stable coins, which are privately issued digital tokens, And there are lots of discussions about the variations of different types of stablecoins. I'm afraid I don't have time to go into that today. And then there are publicly issued digital tokens, which are often called CBDC or central bank digital currency. And there's lots of variations of both flavours. There's a really cool piece of analysis by the IMF, which is this circular diagram here about what the real flows of stablecoin volumes are. Because I hear a lot of people telling me stablecoins are going to be the answer to everything. You know, if you go to fintech conferences, you get that a lot, right? I'm not myself in that movie, but I do think these things are going to change the way we do things over time, but not nearly as radically as many in the industry are suggesting. This is an actual attempt to chart the genuine volumes involved, and it's from an IMF working paper. Long story short, right now, stablecoin activity is probably less than 1% of global payment flows. So that's not bad, given it's very new, but still a long way from being dominant or material or, you know, life-changing, right? But it is growing quite fast, so we have to keep an eye on it. And my request to you here is be data-driven. Don't get carried away with the hype. Actually look at the numbers and look at the trend lines and think about what that means. The data here is important. Interestingly, though, in Africa and the Middle East, as opposed to the other regions, it's more like 1% of payment flows. So that's very interesting. That means there are problems in Africa which at least some people think stablecoins are helping solve. Over on the right-hand side is a piece of work that the Bank for International Settlements has been doing for a number of years now about trying to see how tokenisation might be made to work in a practical sense, including, and they have a big focus on the public side of this, on the CBD side of this. So they are big believers in anchoring all economic activity in a country on currency provided by the central bank. And then obviously the opportunity for private money exists, but maintained and supported and risk managed, if you like, by the existence of public money as an alternative. And so there is some, you know, the sort of mature way of thinking about CBDC is really to think about how you can integrate it back into the underlying payments infrastructure in a way that's meaningful and helpful. And there are some use cases where there's a pretty solid proposition there. In particular, cross-border flows do look like an opportunity, but that will require central bank collaboration, significant central bank collaboration. But the previous iteration of CBDC, of central bank digital currency, which was really a sort of a response to things like Facebook's Libra, things like a concern around how quickly the platforms were starting to take over the payments world, I think has given way to a more structured framework here. So there's still a lot more road to run here and a lot of reading and thinking if you want to get into this space. But on balance, I think the Bank for International Settlement is eventually going to be right, but probably not tomorrow, if I can put it that way. I should say, and I should have said at the beginning, the standard disclaimer, views expressed here today are my own and nobody else's. In particular, not the Bank of Namibia's. I'm just telling you what I think. Okay, you knew AI was going to be in here somewhere, so here it is. But I think the bit that we should really be focusing on in the payment space is agentic AI, or digital financial agency, if you will. Why do I say that? There's no doubt that generative AI is going to help a lot of people do their jobs better, and already is in lots of places. And I'm sure all of you have got your stories about using ChatGPT or whatever to do to help you with things that you know, save you a bit of time, smooth things over, that kind of stuff. There's no doubt about that. And the bit on the left is McKinsey saying, fully realising that potential does give us a lift in productivity, but it's not the biggest lift we can get from AI. Their suggestion is that that comes when we start deploying digital agents that are capable not only of helping us do what we do, but doing some of it themselves. And there can be a difficult line between those, but it's pretty clear now that the more far-sighted of the large financial institutions are investing very heavily in building use cases for the deployment of digital agents inside the bank to do things to help the bank do things better. Last week I listened to presentations from Barclays, Standard Chartered and others on how far they've gone in this space. There's a lot of work going on there. So there's certainly a very significant opportunity for improved efficiency in what we currently do. But the bit that really interests me as an infrastructure guy is not so much the better, faster, cheaper, not so much make things more efficient, but rather how is the economic structure going to change as a consequence of agentic AI? And I think there's a really big issue to think about here. I've put on the right-hand side there the Google Cloud announcement from, I think it was only a week ago, where they have rolled out, in collaboration with a who's who of the payments world, PayPal, the world's biggest banks, pretty much everyone you can think of, a standardised protocol for agentic interfaces for e-commerce, right? So this is getting a bot to sit between the merchant and the customer and do the thing smoothly, in simple terms, right? Why do you need a standardised protocol? Because, of course, that idea that a robot can do your shopping for you, right, throws up a whole lot of complicated problems around who's responsible if there's a fraud, how do we ensure that the robot is properly authorised to spend the money of the human being, how does the merchant know that the robot is properly authorised, and so forth and so on. So this requires a rethinking of the value chain of retail commerce. It's pretty fundamental. That rethinking is going on in the big shops right now. This is what Google Cloud's A2P protocol is about. It's about saying, here's how we think you should do it. It may not be the only answer, but it's one influential one. But here's another thought for you, which I think goes one step further. I think the way to think about the implications of agentic AI is to think about the customers having bots, not the businesses having bots. So if you're working in a bank right now, you're absolutely, I'm sure, thinking about how you might deploy digital agents for the bank, and you might offer them to your customers to use as well to help them. The next step beyond that is the customer doesn't need your AI, he or she has got his own AI, and there's a lot of logic to why you might do that. Think back to the platforms example. If I'm inside Instagram, and there's a wide range of different banking services to choose from and different financial services to choose from, who do I trust to make those selections for me? How am I going for time? Am I way out? Okay. Who do I trust to make those selections for me? I think you're going to want your own bot for that. And you might get it from a bank or you might get it from a third-party provider, but you'll want it to be independent. You want it to pick the best product and find the best deal for you without being influenced by the commercial interests of whoever's supplying the service. Agentic AI offers us that opportunity. It offers the possibility that the customers have the bots and that they are as powerful as whatever the business provider has. That's changing the balance of power in financial services, at least potentially. I can give you some references to some interesting articles about this idea. You want to? Okay, I'm nearly done. One more wave. Okay, I've got very little to say about this because I don't understand it, but I know it's coming. This is the furthest out wave, and it might be the biggest. You've all heard about quantum computing and the potential of it. I'm really unclear what the potential actually is. The World Economic Forum seems to think it's pretty fundamental. They're talking about the range of possible use cases that might arise and how much it might change what we do. Again, I think the interesting part of this is not to think so much about the government having supercomputing or a big business having supercomputing, but what if we all have access to supercomputing? How will that change our relationships with each other? And is that going to be possible? Because this is the furthest wave out, I'm really not great to give you guidance here. You need someone who knows a lot more about the technology than I do. But I do feel that this is going to ride over the top of all of the waves we've just talked about and interact with them in a very complicated and unpredictable way. Hopefully that'll be after I've retired, so you guys can worry about it. We'll see. All right. I've got 2 minutes and then we're going to get some questions. These are my suggested rides for organisations, not so much for infrastructure providers or central operators. And you will all have versions of this, or many of you have versions of this already inside your shop. I do think there's something special about wallets. That little diagram is from a guy called Dave Birch, and it's published in the Payments Systems journal, academic journal. I can give you the references if you're interested. He's making the argument that the wallet is going to be the centre of the customer's universe in payments because it will bring together the identities that the person has with the access to payment systems that the person needs, with the stores of value that the person wants to use. So those three things meet in the wallet and how it works. That's the argument. If that's right, and then we say, okay, let's give the wallet smarts, let's make it an agentic AI, if we make the wallet clever, it starts to take on a fair bit of importance. So having a strategy about where wallets are going and what your organisation wants to do to take advantage of that is a good thing, right? Obviously, we need to think about tokens and token strategy. Where are we going with e-money? The government will be thinking this through and having a view on it, the central bank. I think it's getting close to the time when the large commercial organisations in Africa need to be thinking about stablecoin strategies for themselves, both in terms of risk and in terms of opportunity. The risk is outside stablecoins coming into Africa, typically denominated in US dollars or at least a foreign currency, and becoming commonly used for payments. What are the implications of that? That seems like quite a big risk to many African organisations and economies. But there's also huge opportunities there to speed up various processes using tokenised money. Platforms we've talked about, I'm not going to spend any more time on that. I didn't even mention the use of AI and cloud computing to automate government processes, to automate any large volume payment process so that it happens much, much more efficiently. But there's a huge amount of work to do in that space in every country on earth. And we need to have a view on regional strategy, as I mentioned before. Where are we going with cross-border? What are we going to focus on? What are we going to invest in? And some risks to end the conversation. We all know there's a massive fraud risk sitting in the middle of this somewhere. Typically, it's because the hyperconnectivity, everybody's always on the digital device, and the existence of deepfake AI, the ability to confuse people using very, very clever technology, leads to fraud risk. So there's certainly a battle to be had there, which is starting to be fought now. I do think there's quite a big risk of digital divide here as well. So basically this means those who have the money and the access and have the AIs, have the clever AIs, are going to have a much better life because they got much better access to financial services. So this might actually start to reverse financial inclusion gains if we don't manage it carefully. I mentioned before the risk of digital dollarization. What are the risks to monetary sovereignty of widespread use of US-denominated stablecoins? Just think about that for a second. And then my last one is this thing about platforms and they're dominating our lives and the creation of what amount to digital empires, where you're kind of captured by the empire and there's insufficient competition in services between the different empires and between different services. That's it. I hope that gives you a frame to think about what is actually going to be a very exciting future. Thanks very much.
Thank you very much, Chris. That was brilliant. As an economist who knows very little about payments, it felt like a masterclass, and I learned a lot. I only take umbrage to the fact that he said spreadsheets are boring. I don't know. Did you guys hear that? I mean, I happen to love pivot tables quite well. There is something that he did share, and I want to ask the first question really around your second wave. You spoke about unbundled banking globally. I'm curious, you showed slides on market share. How are these other entities doing with respect to profitability? Is the transaction fee then split between Google and the rest of the banks? Right, so I think we can kick off with that question. Ladies and gentlemen, if you have additional questions, we have a few minutes. There will be roaming mics. we can entertain those for a few before we invite some of our panelists to also have a discussion. So Chris, why don't you kick us off with that one? And then as you can recall, we have our Menti platform here that's available. If you can kindly, for those who hadn't set up, scan the QR code and engage. Chris, what do you think?
What a fantastic question, hey? The economics are different in the platform world because what they do is monetize eyeballs. They're less interested in making money directly from payments and much more interested in making money from the existence of your attention on everything that they are offering you, not just payments. So payments is a means to an end in a way in which a bank wouldn't normally see it that way. So the economics are actually fundamentally different. And I suppose there's an element of risk in that because they'll be less concerned to maximise returns from the actual payment service and more interested in maximising returns from the total experience. So that's probably the general direction I'd give on that. One other observation on economics though, does anyone want to give a view on why stablecoins are suddenly growing so fast? It's related to your question about Google. It's about who's making money here. Anyone got a view that they want to have a go at? He did, but why did he do that? Remember, he never does anything except for his friends, so why did he do that? Oh, I'm sorry, I'm not supposed to say that. Did I say that out loud? No, so who of his friends are making money from stablecoins? The issuers of stablecoins. So what's happened and what's behind the Genius Act is that JP Morgan and Citibank and the world's largest banking organisations have been watching Circle and Tether mint it from stablecoins. Why are Circle and Tether making so much money? Because they've used stablecoins to recreate the traditional check account. You remember that? You used to get the money in from the customer, not give them any interest, and use that money for your own purposes. All right? Banking doesn't really work that way anymore, but stablecoins do. You get the money in, you give them a stablecoin, they go and do whatever they want to do with it. You don't pay them interest, and you retain the entire commercial benefit of the money you got in to issue the stablecoin. So Circle and Tether have ridiculous multiples because they are at the forefront of the stablecoin economy. What does that mean for us?
How are we doing, ladies and gentlemen? Have we managed to log onto the platform? As a show of hands. Are we getting some interaction there to the team at the back? Thank you for that confirmation. Is there any burning question that either one of you have for Chris at this point before we open up invariably?
There must be a question.
There must be.
I'm embarrassed if there are no questions.
There is a question right here at the front, Chris, from DG Wanguta. Thank you, DG.
No, thank you very much, Chris. I think this was a very interesting presentation where we have really gone through the genesis of the payment system and what is taking place globally. Now, talking about this torrent of change, the different waves that you have outlined, what really triggered my mind is the unbundling of banking. Of course, banking has really been playing quite a significant role in the whole process of financial intermediation and also in a payment stream. Now, moving forward, or maybe just at the moment, what have you observed of these banks? Their competitive advantage in a way is being taken away, as you have indicated, that their natural synergy are being reduced quite significantly and other players are coming in. But of course, they still sit with that competitive advantage.
Yep.
What have you observed in terms of their behavior so far?
Right.
And how should they behave with this torrent of change moving forward?
Okay, and I will have a strong view, but I'm happy to give you mine. So I think the first thing to note is that in very broad brushstrokes, there's a big difference between the global north and the global south. In other words, between developed and developing economies, in very broad terms. In developed economies, the banking system has typically reached most of the population already and therefore has an opportunity to defend a pretty well-developed economic position. And so in places like my home country of Australia, which is one of the most banked countries on earth, 99-point-something% banked, right? Everybody has a bank account, and they pretty much do payments out of bank accounts entirely and solely. So mobile money, nothing like that exists in Australia because the banks have completely occupied the space, right? That's a sort of a form of the global north experience. The banks are responding to this challenge because it's still a challenge, but they're in a much better position to respond, and so they are speeding up products. You know, we started a instant payment service about 8 years ago now. Had quite a lot to do with the design of that, so I'm really pleased to see it doing so well. But they're now in the process of taking the existing payment systems and putting them on the instant payment system. So the bulk service is going to go onto the instant payment service and become part of the same basic infrastructure, opening up the interfaces to the instant payment service so that the range of things you can do with it and the data you can get out of it become much greater. So that's how the global north is responding, and I think in most countries the banks will successfully defend their positions, but in the process they're going to change themselves quite a lot. They're going to start to look a lot more like fintechs. They're going to have to make some choices. Do you want to be a platform business yourself? You could, but that's not an easy path for a bank because you need the range of attention from the customer. You can't just give them financial services anymore. That's a hard call, right? Do you want to be a curator, that is someone who's close to the customer and serves the customer's needs, getting services from a wide range of different people? That's another possible positioning. So the nature of banking is going to start to change, but I think the banks themselves, as commercial organisations, will continue to prosper if they play this card well, right? The global south's a bit more challenging, and we've already seen China, India, East Africa, and increasingly all of Africa, banks, to be honest, giving up retail payments business to non-bank players. This is a significant evolution. Business banking is not in that mould. The banks have still got a significant value add and there's still therefore a viable business there. But if you're, and then South Africa and Namibia are in an unusual spot because your economies are very evenly balanced between the global north and the global south. So it's actually hard to predict how the evolution will happen here, but I'd be happy to help you if you like. Thanks.
Thank you very much. Chris, another round of applause to Mr. Christopher Hamilton. Chris, if you don't mind, I will invite your guests to the front while we prepare for the dialogue discussion. I must say, when he said banks without a retail business, every single part of my value system was shaken because I never thought that could exist. And I'm sure most of you have felt the exact same thing. He has set the tone with 7 waves that are coming. I feel I was ducking the moment he said the 6th one on agentic AI. You really felt like you were speaking about the Terminator that's here to join us. But are the risks that grim? So we're going to have a panel discussion now where we're going to be discussing bridging borders, the future of cross-border payments. And really, it's a fireside dialogue with experts who have a view on how the next wave of cross-border payments would actually look like. We're going to ask Mr. Christopher Hamilton to stay. He's going to moderate this panel. And if you don't mind, I'll invite your guests to the stage. I'm going to start with Mr. Tim Masela. He's an independent consultant who has had years of experience with payment system in Southern African region. He was formerly the lead of payments and settlements initiatives for the SARB and will offer insights into regional integration and standards. Ladies and gentlemen, Mr. Tim Masela. Next on the stage, if I may, Ms. Roxanne Witbooi, Head of Compliance at Standard Bank Namibia. Ms. Witbooi has expertise that lies in the critical area of compliance and anti-money laundering within payments. She will shed light on how we can ensure that we are streamline cross-border payments while maintaining robust oversight. And it was the 3rd point raised by the Minister, trust within the system. Ms. Roxanne, please. And finally, Mr. Christian Hamutenya, Deputy Director of Compliance, Supervision and Strategic Analysis at Namibia's Financial Intelligence Center. He is at the forefront of ensuring our payment channels are secure and not abused for illicit purposes. His perspective will be vital in discussing how to balance innovation with security while at the same time ensuring regulatory compliance in cross-border context. Chris, over to you.
Thank you very much. Well, it's nice to have a comfy chair. All right. There are a couple of introductory slides. Have you got those ones there, guys? I just wanted to position our discussion a little bit. As you're all aware, there has been a very strong global policy focus on improving cross-border payments since about 2020. I think to some degree spurred by COVID and the need to really improve and make more efficient those cross-border processes. This has been spearheaded by the Financial Services Board, and they have produced targets around the 4 challenges, which they say are speed, cost, access, and transparency. So those are the 4 things, and the FSB has published its targets in those 4 areas. How much should a payment cost, how quickly should it happen, and so forth. And they've provided a roadmap of 17 or 19 key actions that need to be performed in coordination internationally to improve payments. So we're not short of thinking in this space. There's been a very consistent and sustained effort to improve cross-border payments, which so far has perhaps not delivered the results that we would like to see. The challenges are so complicated and differ significantly from place to place that even with that very high quality thinking at a global level, the on-the-ground implementation proves to be remarkably challenging. Africa is, as I'm sure you're aware, a special case because of 54 countries, 40-odd currencies, and massive cross-border challenges, but also a huge opportunity for an uplift in efficiency, in economic efficiency, if we can get this right, more so than any other region. So that's our space. What I'd like to try and do, and I'll start just asking the panellists a few questions. We'll spend about half an hour starting with the local. We'll start with CMA as our area and talk a little bit about that and the implications of that, move on to the SADC region, then perhaps look at the continental opportunities and the global opportunities, talk a little bit about those things. And then in about half an hour or so, I'd really welcome questions from the audience for the panellists on this general topic of how do we make cross-border payments really work for Africa. How does that sound? Cool. Okay, let us then ask Tim to kick us off. Tim, back in 2020, the CMA had a seamless way to make cross-border payments essentially using a domestic infrastructure. We've unfortunately not been able to continue with that. Can you just talk us through the history there? What happened and where are we now?
Thanks, Chris, and good morning, colleagues. I think, Chris, I would expect that the colleagues in the room understand the history of how the EFT payments were conducted before the CMA directive was issued. So, in essence, what we're saying is there was an anomaly where the payments between the sub-region of the 4-member block of Eswatini, Lesotho, Namibia, and South Africa, the EFT transactions were processed through the South African system and South African platform, and the authorities in the other 3 countries were blinded to what was happening, because they were happening as though they are domestic. Indeed, we enjoyed the efficiency gains from that. However, there was reason for us to regularize that. And Chris, to be blunt, it's just that I only have one commercial bank member on the panel, but they can comment. I would like to say that the public-private partnership failed in that regularization effort, because my expectation would have been that the regulators plus the private sector should recognize the anomaly and work together towards a solution. But I'm not intending to be provocative, but the commercial banks can weigh in on this. When this was recognized and we had to address the issue of regularizing what was happening, it seems the commercial sector did not embrace that. And as you all know, that leads to regulators issuing directives instead of us working together towards a solution. Now, in doing that, the central banks wanted things to be done the right way. They also, I would accept that maybe missed some of the points to say. The payments authorities are focused on safety and efficiency of the system. But there's other regulators when you come to a cross-border space. There's capital controls. There's money laundering authorities. Now, the directive was issued, and when implemented, it had unintended consequences where the voice of the commercial sector that could have been brought in could have resolved these issues. Platforms were adopted to ensure that the payments are processed, but then there was issues of high cost, slow speed, and negative consumer experience. From the central banking perspective, there was a view that the commercial banks should care about their clients and ensure that all those are avoided. But unfortunately, when the directive was issued, there were the three bad experiences that happened, and we had to grapple to resolve those. The system is not near perfect. I think it can be focused on to make it work better, but I think the private-public partnership in solving issues is what can help us address the issues. We managed to mop up here and there, but I think we can do better, and I think further questions are relating to how the infrastructure can be laid out, how the regulatory and supervisory framework can be, as we converse in the conversation with my colleague.
The challenge seems to be different important aspects of public policy pulling in different directions, because we really want to see the facilitation of cross-border trade, no question about it, but we also want to see the prevention of financing terrorism, the management of the currency and so forth. So the tension between that two is where we're coming apart. Is that right?
Yes, that's right, and I think we are on the right path. We can move faster. We need to recognize the tensions, and we need to strike trade-offs, at least from the regulatory space. If we talk about payment regulators...
And naturally, when South Africa was subjected to the FATF's mutuals, we were then called